Hello, everyone. Welcome to this special episode of Expert Speaks. We have picked up a topic which is not often discussed on the videos in our channel, as well as not a great deal of information which is available. This is with respect to creation of family trust. Family trust is one of the finest ways to manage your assets, manage your taxes, minimize your tax incidents, and more than anything, to manage the asset for the benefit of the beneficiary who is intended to be the beneficiary. Whatever could be your circumstances, you could be an NRI, you may have a dependent, a member of the family, you are worried how after your time the interest of this member can be taken care of. All these things can be answered in the formation of a family trust. In this episode, we are going to talk to expert of the week, Mr. Jatin Popat. Stay till the end of this video. We are going to discuss very important points, very minute, intricate points, which will help you to understand the importance of this subject. This is NRI Money Clinic for you, and I am Dr. Chandrakant, but your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Are you an NRI living outside of India for more than 10 years? Have you dreamt of a retired life in India in a beautiful house and a lifestyle of your choice? Your dream can come true only when you take some simple and effective actions today. I will take you through a step-by-step process to make this dream come true in my webinar, Stress-Free Retired Life in India. Hello, I am Dr. Chandrakant Bhatt, financial guide and founder of YouTube channel NRI Money Clinic. I have to my credit creating secured retired life for thousands of NRIs spread across more than 60 countries. If you have an intention to make your dream retirement come true, register for my webinar. More details are in the link below. Dear viewers, to talk on the subject of family trust, who can be better than Mr. Jatin Popat? Mr. Jatin Popat is a very respectable name in the field of inheritance specialists in the country. He is the founder and CEO of Will Genie from Mumbai. He advises several corporates, several financial advisors to manage the client's assets by helping them form the trust, guide them on wills and various aspects of inheritance planning, tax management, and other things. Welcome to this episode, Jatin Saab.
Thank you so much, Dr. Bhatt. Thank you so much, NRI Money Clinic, for inviting me and hosting me here to share my views, whatever we can guide your members and audience.
Sir, as years pass by, this subject of trust is gaining more and more importance. Reason being today, the need to create trust is becoming more and more pronounced today. People have become NRIs. They thought they'll work for a few years and come back, but their life continues over there. They garner assets. They get mingled with the society, culture. They become one amongst the locals over there. They will not find a chance to come back. They also have lots of assets inherited or their own created assets. So they become dependent on these kind of a trust structure to manage these things. At the same time, there are other problems, like, for example, there is an autistic child, there is a dependent family member. The parents or the siblings are worried, how will we take care of them? If something were to happen to me, how will the interests of the child be taken care of post this event of the caretaker being not there in this world? In this episode, I want you to answer all these questions and take these factors into account. I know that family trust is a very vast subject. We can keep discussing day after day, but let's restrict and focus on these final points. My first question to you is, you have worked with lots and lots of NRIs. Why do you feel every NRI with substantial assets or have a taxation issue should consider forming a family trust?
Dr. Bhatt, you are right. As you mentioned, that family trust is becoming more popular because it is a certain inheritance. One can be assured that whatever they want to give and however they want to give to the next generation can easily be done in a very proper manner, and it can be for long term. What is happening that will writing was a traditional approach. Many of the Indians and foreigners, they used to write a will, but there are uncertainties involved, whether whatever is written, the family will accept, number one, whether the government will cooperate to distribute. So there were uncertainties towards those parts, which can be cut down by creating a family trust. A family trust is called a living family trust. You are transferring something in your lifetime and you are managing after it, automatically it is used for the family members. So the inheritance uncertainty can be cut down. And that is the reason that everywhere this family trust is being so much is being accepted by most of the people. In other countries, it has been popular for last 40, 50 years. In India, of late, people have realized that this is also an option. People were not writing will also, and which has started very well now in last 10 years. And family trust is the latest thing which almost the wealthy who are having 10 crore plus, they are considering it because of this assured inheritance to the family as per their wishes. Particularly the NRIs, where they have to understand that the wealth belonging to them, either from the parent side or their own side, the management by their own name, it is not so easy. Number one, the inheritance taxes in some of the countries can kill a lot of money created by the parents. Secondly, their own income, a global income, can be definitely taxed to their own tax, their returns in those resident country. So there is a three-prong issue. Number one, inheritance tax. Secondly, the global income every year, and thirdly, the managing the asset which is residing in India, which is efficiently should be managed by your guidance, and it is to be managed locally by the trustees. So this is something a very beautiful way one can look that this type of creation of a trust can help to overcome many weakness and the will.
Sir, you mentioned about the trust. Yes, trusts are useful. Can you give, based on your experience, a threshold level beyond which, if somebody has the assets, the trust works in their favor? It's not that we can't say that every NRI should have a trust. There should be some threshold levels. If somebody has got certain amount of assets, certain amount of responsibilities, certain amount of challenges, taxation issues, who should get into this creation of family trust?
So you mean to say objective wise? Objective wise, there are two things. One, a particular need is there and you are creating a trust. Secondly, the size of the wealth. So two different aspects are there. The objective wise, as you mentioned earlier, that people with the special child, people with they have a lot of liabilities or they want to protect the asset, their personal asset. The people in some of the countries where they are following the Muslim religion, where the Sharia applicabilities are there. So there are few objectives are there. Some of the people station. So those objective based, they definitely need to consider a trust. For the size of the wealth, yeah, we feel that people having more than 10 crore of the wealth in India, they should consider doing this type of trust because there is some basic annual compliance is there, and there is also the protection of those wealth is meaningful because something happens, those wealth 10 crore plus, the everything will stuck somewhere and it will be difficult for managing from abroad. So the reason is very clear that do you want to stuck your asset in the disputes or do you want to manage the assets very successfully from sitting in other countries? So this trust are basically we are recommending people with a 10 crore plus wealth in India, either in the immovable or financial asset, they should consider this, which can be really easy for them and justified to the basic cost and compliance.
Now, when it comes to the question of wills, it's more or less pretty clear. Somebody has to write a will, a certain care has to be taken. Literally, more or less, it's a well understood subject. But when it comes to question of trust, it's not much is known to the viewers or to the general public. Can you, in a simple way, in a brief way, can you tell when somebody wants to create a family trust, what are the elements of a family trust, how it should be written? What are the different roles the trustees have to be taken? Can you take us through a picture of how exactly this gets created?
Yes, doctor. I think it's really easy to understand when I say that. Okay, if you want to create a separate company or you want to create a locker or safe deposit locker where you yourself your money kept at home or jewelry kept at home, partly you put it in the locker so that keys can be handed over to your spouse or a family. That something happens, please use it. There is no procedure required for a transfer. So because they already holding the keys, their name was there as a joint or whatever. So by way of such type of thing, we are already ensuring that those inheritance process can be curtailed. The same way, in a family trust, you are creating a trust where you are transferring your asset to a trust. You are appointing a managers who will be managing the trust, which are called trustees, And the beneficiaries can be you, your spouse, your family members, your kids, and all. So this structure is there where the settler who is creating a trust, who is actually transferring, it can be yourself, it can be your family member also. Trustees are managers whose role is clearly defined in the trust deed, what they can do, what they cannot do. If they are not want to do, they can resign, the new people will come. So they are playing a role of a trustee as a managers to manage the trust. And the beneficiaries are there who gets the benefit from the trust in a long period. See what happens in a will. Suddenly, the someone is expired and the inheritance comes to the family member. They become the immediate owner. In a trust, this money is there for many decades. Okay, say for example, Tata Trust. So many years has gone, 100+ years, and it has been managed beautifully by the trustees. Same way, there are private trusts are there of almost all the large family groups and the institutions where the assets are being managed by the trustees and the benefits are being given to each and every family member for many decades. So this is the way the trust can manage. It is like creating a separate company for your family, and you are transferring the asset to the company, and the company is managing beautifully, and they get everything they want. And this asset can be held, protected, and used for many decades. So this is the way a family trust is created, which is a small document that we create similar to will, and it is registered with the sub-registrar if they want, and it is started immediately. One can say that HUF was the earlier version. Now the next version, which is the family trust. So this is an advanced version similar to HUF, but HUF was not defined on the proper rules, responsibility, or a trustee was only a karta. Here, everything is defined in a piece of paper, and the managers are outsiders or can be family members. So that way, against the HUF, this is much better version, and that is why the people are preferring to go for the such type of trust in other countries as well as in India.
So, dear viewers, the point to remember here is the individuals are mortal. They live and they leave this world. Whereas a trust is a continuous institution-like structure, wherein which it does not have a death or it continues beyond generation and it smoothly transfers the assets. One question that comes to my mind is you said trust and there are trustees to manage the trust. The doubts that are there in my mind is who can be a trustee? Can the trustees change? What are the key responsibilities of the trustees? What if the trustees themselves do not discharge the responsibilities?
So here, the reason of appointing a trustee is to manage the your wishes, which is written in a trust deed, that how you want to invest, how you want to manage the properties. So trustees is a role, a fiduciary. Whenever there is a family member, they have a fiduciary role because they might be a beneficiary also. So a trustees can be family member, a relative, a professional, a trustee company, anybody. One is to decide that who should be successfully and efficiently manage the trust in a very reliable manner. So it could be your spouse, it could be your kids, whoever, or yourself. So that is something. For NRIs, the being of a trustee is a difficult where the FEMA regulations comes in place, because the FEMA regulation says that one has to be very careful when they create a trusteeship, because they should not manage the trust fully, otherwise it becomes the foreign trust. So normally in NRI case, we are suggesting they should appoint a local parents as a trustee, or the siblings, or professionals, or the friends, or trusteeship company like us to manage the trust, so that this can be managed and decided well, and the RBI issues can be avoided. Because what happens in a FEMA regulation, one can give the money as per the LRS scheme or the applicable thing. But in a trust, if trustee, they will start getting more money because of avoiding the LRS or whatever. So there is a law in RBI says that you can't be managing the whole asset yourself. Otherwise, it can be treated that you have the control of the larger assets than the LRS eligibility. So normally in a trust where NRIs are there, they should appoint a local resident person as a trustee, or a professional. So this, or a combination. So that way they can abide to the law of the India, and also they can sit outside India and guide the trustee what they want, what they don't want. Accordingly, the trustees can behave. The trustee, the rules are clearly mentioned. So this is how the trustees can be looked into by the settler. So having those type of arrangement is good for abiding the law of the FEMA.
So trustee need not be an individual. If somebody has an issue with a family member, I don't want to put him as a trustee. So he can still bring a institutional trustee company to be the trustee to manage the asset, correct?
Correct. Yeah, trustee can be individual, trustee can be trusteeship company. So that this is already in other countries, trusteeship companies are in a big way, they are operating all the trust. In India, trust itself is a little evolving. So currently, the trust level of the to the outsider is little still they have to know evolve. So many family of NRI they are appointing their own family members, and many professional trustee companies are there. Some of the educated people who have created trust in foreign countries, they are okay with appointing the trusteeship company also. Because trusteeship company has all the efficiency and professionals to manage in a right manner of the trust properties, which is mentioned in the trust deed. So they have got added advantage for the family that everything is under the professional hand.
Dear viewers, if any of you are looking to create a family trust to manage your assets in India and you have a need, the need which I've already described in this video, NRI Money Clinic has listened to your requirements and we have added this service in the different services that we provide for our clients. So if any of you have a need to set up a family trust, you can reach out to us. Our numbers are given in the description box there. We have provided a link to the WhatsApp. Click on the link, it takes to the WhatsApp. Just write family trust and send it, and we will guide you to the best inheritance specialist available under our panel. Why delay? Send that message right now. Mr. Poppert, is there any guidelines or do you have some suggestion for those people who want to set up trust while choosing the trustees? What care should be taken? Who can be the trustee? From your experience of working with hundreds of trusts that you have created, do you have any guidelines to follow?
So basically, as we mentioned, like in a listed company or any private limited company, the board of directors who are the key people, who are smart people, who can manage the business to the aspiration of the shareholders. The growth should be there, should be efficiently managed. There is a compliance to be at the foremost important. Similarly, in a family trust, they are playing like a role of a board of directors in a listed company. They should be smart enough. They should be able to see the whatever is mentioned is completely followed by the trustees for the management of the asset, protection of the asset, investments, and distribution decisions wherever it to wish to be taken. So those are the requirement that trustees should have the knowledge of how to be behaved and what are the limitations and what are their powers for their asset related investments. And this is something which is normally happening with the professional trustees in a big way or a professionals. Somebody has their local chartered accountant or a law firm who are they connected to, or sometimes the trustee companies like us, we also run a trustee company. Dr. Butt, as you mentioned, that they also have the familiar on the trusteeship. So these type of things are available in India nowadays, where there is a professionals who manage the trust and the compliance relating to taxation, relating to the FEMA, relating to the legality, relating to all the aspects of the family requirement can be efficiently and professionally been done.
Sir, one of the problems NRIs encounter is, look, you have a tax compliance to do in India and you have compliance requirements in other countries. I know it is difficult to take all these things here on this because NRIs live in so many countries. But as a general principle, are there cross-border compliance issues which have to be kept in mind when the family trusts are formed?
Absolutely, sir. Whenever NRI is based or residing in other countries, they normally have to comply the law relating to the local country where they're residing, which relating to the taxes mainly, and also the asset where they are holding in India. Suppose some assets are lying in India, so there is an income in India generated on those assets, whether in personal name or in trust name, and those reporting to be done in other countries. Now, what is happening that each country has their own law relating to the taxation, relating to gift, relating to the annual global income you have to disclose, or any inheritance comes to them. So the combination of these things are really overwhelming to any NRI, that whether I'm doing the right thing in my country where I'm residing for the law of the tax, whether there will be any issue to me if I do some mistakes. We have some cases in past where the NRIs used to get a lot of money income in India and they failed to disclose in their local country. They say we didn't know. Obviously people feel that okay, it's Indian income, India को पे tax भर दिया है, खत्म हो गया. So that is the way people used to feel, but that's a very loose way. One is to avoid like that. When we are in both the country, law assets are there. You please understand that you need a professional help to understand the law requirement for taxation in India. In fact, there is a FEMA also is there. So in India, FEMA plus tax. Other countries, you have to have more on a tax side, whether whatever you are getting in India, do you have to disclose there? Any inheritance you are getting, do you have to disclose there? Or any family trust is there, whether you have to disclose there? So cross-border thing is really important, and where I think all NRI need to be very careful and need to be attending to the professional guidance for local country compliances as well as the assets in India. So that is very important to. Otherwise, there could be a lot of issue later. It could be some penalties on taxation or some issues on visa or your residence permits, and also one has to be little careful when they do the structuring.
Another aspect is when somebody forms a trust, how do the taxes work around it? And are there any obligations on the part of the person who creates the trust to do regular any kind of a filings to the authorities? What's the answer for this?
So there are two type of thing one has to understand. One is in the local country. So in India, if you have created a family trust, the family trust has to pay tax on the income generated. So any income generated, say for example, there is only one property is transferred, but there is no income. So there won't be any income on the trust to be paid. It could be a 50 crore asset, but there is no income because it is used by the family member. So there is no income. So only they have to file nil return. Another way that they were 50 crores of mutual fund or investment or combination of business asset, they have to earn income, whatever income they are earning, they have to pay tax in India. So that's in India side. As well as they have to see that in other countries, whether they have to, wherever they are residing, is there any obligation on them to disclose this as a global income? Recently in UK, there are issues on the inheritance tax and global income, which is changed on April 6th, which is again important for all the UK residents to understand. And there is a change in the law. Please go to your local advisors and understand before it is a mistake by you during this current year filing. So it is very important that law of every country is also changing. So you need to get aligned. Every year they should check with their the tax advisors whether anything changed during the year. Nowadays, a lot of countries are changing their law relating to this type of thing, and hence one is to be very cautious about these things, sir.
Sir, you have, for the many NRIs, you have done hundreds of trusts during your tenure in Philgenie. From the observations that you have made, what are the common pitfalls NRIs make or get into when they form the family trust? Can you give a ready reckoner or how they can avoid this by knowing what the pitfalls are going to be like?
So there are issues around when they have income in India, whether there is a trust or no trust. So that's a very basic thing, that whenever you have income in India for the asset, one is to understand the compliance in India and as well as in the local country. When there is a family has created a trust or you yourself have created a family trust, you have to abide by again the taxation issue and also see that the management of the trust is happen in a nice manner. The trustees are good to manage your all the trust around, and they are reporting everything to you and the government, and also you can very well report to your local government in resident country. The appointment of the trustees is very vital. The creation of a trust deed where the rules whatever you are setting up should be also be very detailed one for the investment policies, for the taking care of the family member. It could be also vital, because the trustees, if they are outsider, they should be abide by those strict guidelines which is mentioned. The discretion get little lower to them, that no, they have to completely abide by those type of thing. So these are the things that one has to really understand, that the trusteeship, the management of the trust, and the taxation compliances in both the country. Anything that you have to do is review every quarterly or every yearly with the trustees, that what is happening around, what are the things they have to comply in both the country, because compliance is the foremost for the NRIs for both the countryside. Otherwise, the income generation can continue from the properties, from the financial assets. That's beautifully can managed by the wealth advisors. But the compliances is something very important. Whether the trustees are doing anything wrong to your assets here, whether they are managing without any conflict of interest. And these are the typical thing one is to understand when they structure the trust and appoint the trustees. It could be good for combination of a professional trustee and a family members, or any local reliable person who can have a check and balance concept for the management of the asset, management of the properties and investments policies.
Mr. Poppert, thank you very much for bringing all these points and educating our viewers on the benefits of family trust. And for those NRIs who are looking to secure their assets back home in India, this could be one of the finest idea that we have floated on our channel. Thank you very much for your kindness to come on the program and bring all these points for the benefit of my viewers. We remain in gratitude to you for all these points that you have brought for us. Thank you very much, sir.
Thank you, Dr. Bhatt. Thank you, NRI Money Clinic channel, and all the viewers. Wish you a very all the best for your future life.
Dear viewers, hope this video helped you to understand what are family trusts, who can go towards it, the benefits of it, and the pitfalls to avoid in case if you're going towards the family trust. If it helped you to understand all these finer points, do give me a thumbs up. Do not forget to share these videos with your friends, relatives, and on all the social media on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another topic, with yet another expert next Tuesday. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.